G'day everyone and welcome back to this Share Cafe Hidden Gems webinar. I hope you had a great week. Now something of note, something that caught our attention this week before we introduced the companies was an article by Anthony Abood, who's the portfolio manager for Perpetual. That's what I was trying to say. And he wrote an article called The Perfect Storm Creating Global Supply Chain Issues. It's really worth reading, and it spoke about cost inflation and how it's rampant through the supply chain. And they have literally spoken to hundreds of companies, and here's some bullet points in regards to the consistent feedback they're seeing in the supply chain. One major supplier to supermarkets and the food services channel said, usually we have 1 to 2 inputs with some degree of upward pressure, which was manageable, but now they're seeing 90% of their inputs into products are up double digits. And both retailers and manufacturers are seeing cost price inflation from the following. Freight, for example, the market has seen the cost of container shipping costs go up 2 to 5 times, and a lot of the Australian ports are currently blocked. Anything with an oil base, plastic, resins, diesel, all increasing in price, not to mention commodities, copper, meat, sugar, wheat, cotton, steel, all going up in price. The builder next door here said he is seeing price increases of 20 to 30% in timber and steel beams, and it's making it really hard for him to price a job these days. Labour is a big issue. The availability and productivity of the labour force is extremely tight. One retailer Perpetual spoke to said that they've had job ads out there for over 1,000 jobs that they're struggling to fill, and one food manufacturer has 500 unfilled jobs. Manufacturing costs in China are rising, whether it's due to rising energy costs or higher labour costs. China is starting to export material levels of inflation. That's a really important point to remember. And Jack Dorsey, the CEO of Twitter, recently posted, hyperinflation is going to change everything. It's happening. So while we've been in an investment environment for 40 years of deflationary pressure and decreasing interest rates, it appears to be on the cusp of changing, and that is something all investors will need to consider moving forward. Now, it's an article well worth reading. Okay, let's make a start. Don't forget to ask questions. Don't put your hand up. Type in the box provided. We're going to start with Cluey Learning, ASX code CLU, market cap of around 133 million. Hasn't had a 1-year return, hasn't been listed that long. We have the company is an Australian educational technology company that supports the learning growth of students by bringing together expert educators, cutting-edge technology, and proprietary learning data to offer students a range of targeting learning services. We have with us Mark Rohald, who is the CEO. Mark, over to you. Thank you.
Thanks, Tim, and good morning or good afternoon, everybody. Could we move to the first slide, please? I'm going to start off by trying to provide you with some context in terms of the problem that we're trying to solve. And this problem has been around for some time now. If you look at a typical school classroom from the 1920s, the 1980s, or even today, fundamentally, nothing has changed in classroom-based education. And when we look at the way a classroom is constructed, it's set up in rows and columns, 6 kids in a row, five rows, taught 7 hours a day, 5 days a week. That model was designed and developed during the Industrial Revolution to massify education. And it's done a great job at that. It has massified education. On the flip side, we find that we test the kids across all years, in Australia in years 3, 5, 7, 9, and year 12. And we know that every child is at a different place in their learning journey. And how do we try and support them through that? We put children of the same age, learning the same content in the same class in front of the same teacher. And that's led to a disconnect in terms of the learning outcomes. And when we look at the performance of Australian school children, notwithstanding the vast amounts of investment that have taken place through increases in government funding, we see continuing declines in our educational outcomes when you compare Australia to other OECD countries. And the gap is getting bigger and bigger. I'm often asked whether this problem, where we see kids or parents looking to augment their learning, their school-based learning, by turning outside of the classroom for their support as being a COVID-induced phenomenon. In fact, quite the contrary. When we ideated Cluey back in 2017, we saw a stark issue that existed with massive differences in achievement gaps. And the Grattan Institute has done some really interesting work where they quantified that the existing achievement gap amongst the kids in our schools in Australia is more than 10 times greater than the gap that would have been developed during the COVID-19 disruption. So the problem has been around for a long time. COVID has simply accelerated it. We go to the next slide, please. So in essence, what does Cluey do? And I'll frame this up very simply, then I'll go into some detail for you. Cluey augments traditional schooling for K-12 students across Australia with a range of comprehensive learning services. Our core business is we focus on delivering live, online, one-to-one and small group tutoring, fully mapped to the local curriculum, using our own adaptive proprietary learning platforms that support individual student learning needs and progress. We make extensive use of data and learning analytics to power the learning that every child receives to Cluey. We cover all school years from years 2 to 12 in maths and English, and we have chemistry for years 11 and 12 as well. We're just about to release 2 new subjects, which I'll talk about shortly. Our core focus as a business is we're a B2C business. We deal directly with parents and students. We don't sell to schools or through schools, although more recently, as we became approved under the New South Wales COVID Intensive Learning Support Program, we're now delivering services into schools. Also, more recently, we made a move into our first acquisition, which is in the adjacent or extracurricular area of coding. And we'll talk about that a little later because we share a common customer data layer where the same parents and students are consuming the curriculum-aligned content and learning are now also outside the classroom, are now also consuming other types of learning to support their co- and extracurricular desires. We're defining and leading the sector. We have seen a massive and accelerating shift to online learning support before COVID and more recently with COVID. Our core academic services make use of data and proprietary learning analytics to optimize every single interaction, and that enables us to constantly refine the value of our services. Can we go to the next page, please? And this is a big market. In Australia, there are around 4 million children, school children, and around 1.6 million of these kids are using tutoring or considering using tutoring in the next 12 months. And a further 2 million students use or considering using other forms of learning support outside the classroom besides tutoring. So our total addressable market in the core tutoring and test prep space is around 1.6 million customers, and the broader learning support space is around 3.6 million customers. And in the main, as parents and students historically have turned outside the classroom for learning support, they've turned to tutoring and test prep, which is also highly traditional. You either go to a learning center, which is a better version of a classroom, or have a tutor come to your home, or you go to their tutor, and that we refer to as the pay and pray model. You have no idea what they're doing with your kids. As you move into the online model, and if you deploy data and learning analytics to support all the learning, you can define and deliver a far more optimal learning solution, which I'll talk about shortly. Next slide, please. So when we think about what Cluey does, it's not simply about matching a student to a tutor. That is an important piece, but it is not the only piece. For great teaching and learning to happen, we need 4 key elements to come together, all simultaneously. You need all of the curriculum and content designed and built digitally in micro bite-sized chunks, all scoped and sequenced correctly, available for the student and the tutor to work on. You then match the student to the tutor who's highly cognate in the discipline, which is the coach or the mentor working through the learning program with the student. This all needs to happen in a live, synchronous online learning environment with full video, audio, and collaborative whiteboard. You need to deliver targeted practice between the learning sessions. That's all auto-marked, graded, and feedback provided. And then you need to measure every single element of the learning interaction to deliver quantitative analytical feedback, and you get the feedback from the tutor to get you the qualitative feedback, which then reshapes their learning program for the following week. Next slide, please. So we built all of those systems and processes. We built them out in 2017 and went live with our first learning programs delivered in 2018. So we built full video, audio, collaborative whiteboard learning environments, fully transparent, fully synchronous, because young children need to learn synchronously, not asynchronously. And we take all the load off the tutor because all the content curriculum is all there. The teaching and learning methodology is all baked in, and the auto marking of the students' work is done through our platforms. And we sit all of the learning platforms and environments on top of our enterprise level platforms that enables us to manage large volumes of students and operate at scale. Next page, please. So people often ask me, so how do we really use this data? Like that's the secret sauce in Cluey. So we measure every interaction, around 100,000 data points in every learning session. The audio track of the student, the audio track of the tutor, the video track of the student, the video track of the tutor. What content was consumed by whom and when, in what order? How much time did they spend on that content? What questions were answered? By whom? Was the student helped? Was the student not helped? What did the student get right? What did the student get wrong? We measure all of that. We now have a data lake of more than 17 billion data points, and we can use that to benchmark each individual learning session against. So we record all of this and we feed it through our AI, and it does a full quality assurance review of every single learning session. And we can click in if there is any deviation in terms of what's happened in that session. We'll flag it to us. We'll go straight in at minute 27. There was a deviation from the learning program. We can see it's fully recorded. And we use this information to also optimize the tutor matching and the tutor performance. We use this to get feedback from the student on the tutor, and we use this information to then optimize the teaching and learning development programs for our tutors to deliver better learning programs. Next page, please. And we know that our offering is now achieving widespread appeal and is developing scale. We know this because we have a high, our student demographics matches almost identically ABS data. We have a high proportion of our students in public schools. 61% of our students are in public schools and around half our students are in primary schools. We know we've got the pricing levels right. We charge $80 for a weekly service for one-on-one, and we charge $50 a week for our weekly service for small group. And between those two price points, we've been able to get mass appeal across all of Australia. Next page, please. So here's a quick snapshot of how the business has been growing. When we went live with our first paid sessions back in July 2018, the big question everybody asked me was, will school students learn online? 3 years later, that question has been answered emphatically, and not surprisingly so, because we are dealing with the most digitally native humans the world has ever seen. Now, the real question that I think needs to be asked is, will school children want to learn purely in a classroom? And if you have a look at the charts in the slide, in terms of student sessions, we have been scaling significantly, and in terms of our revenues, we have continued to scale significantly. And this is showing the strong tailwinds behind our business as this mass shift to online learning has occurred with school-based education. Next page, please. Here's a quick snapshot of how our business has been performing. In Q1 of financial year 22, we managed to get our customer acquisition cost down 18% compared to the prior corresponding period to $468 per student. In terms of average lifetime revenue, we generate around $2,181 of average lifetime revenue. And after the tutor cost, that generates around $1,145 of lifetime value. And if you compare the lifetime value metric to our customer acquisition cost, we generate around $2.4 of lifetime revenue after the tutor cost relative to the customer acquisition component. So for every dollar we spend, we generate $2.4 of net revenues. And that means every single student that we acquire adds more to revenues than to costs, and that allows us to then deploy that surplus down to covering our overhead. So it then becomes a scale play. The unit economics will stack up. The more students we are able to enroll, the faster we get to profitability. We've scaled our tutor base, which consists of two components. 30% are teachers, 70% are uni students, to around now just under 1,700 tutors across Australia, all recruited by us, trained by us, developed by us, quality assured by us. In terms of student sessions in the quarter, we delivered 122,000 student sessions, which was up 132% from 53,000 the prior period. We generated 2x increase in new students, which delivered 2.3x increase in sessions, 2.3x increase in revenue, and a 2.4 times increase in gross profit. So if we can just go to the next slide, please, Tim. One more. In terms of growing faster, harder, we are growing exponentially. We're using data and learning analytics to optimize and scale the growth even faster, to drive improvements to our core service. We're adding new subjects that will be launched in January 2022. We're launching in our first international market, New Zealand. Soft launched already, full launch in January. We have developed a business-to-business model now where we are delivering our services in schools. And in terms of strategic M&A, we are now scaling our business into those areas that are adjacent to the core. And we announced our first acquisition around 4 weeks ago with the acquisition of CodeCamp, which is the largest provider of coding and digital skills education to school children. I'm happy to turn to questions.
Thanks, Mark. Coding, that's something I should have learned. Now, can you talk about how you acquire a student?
Sure.
How do they find you, and do you work with schools?
Sure. So we are primarily a B2C business, or historically all the education businesses I've built have been B2C. That enables us to take full ownership and control of the education and have direct line of sight of the students' performance. How do we recruit our students? The core paid search, paid social channels, Google, Facebook, Instagram. We spend a lot on brand. More than 20% of all our media spend goes on brand. We are on channel 7, 9, 10. So, you know, we have a big digital marketing team of nearly 10 people. And we continue to scale and drive that customer acquisition cost down all the time. We've seen the brand now really starting to come to the fore with the volume of branded search increasing all the time. I think there are 2 questions that have come up here.
Let me get to those. I'll summarize those quickly. One of the issues, do you think you'll see any online fatigue post, children learning all those school hours
great question.
online?
It's a great question. I think I've often been asked, has the business been a recipient of the COVID benefit? And I've felt around 10% has been the push because of that shift to online. We don't think there is going to be any reason why students are going to move offline. When we look at the scale and rate at which this shift to online has occurred, it has emulated what happened in post-schooling education. The challenge was never the students. The challenge was always the parents and the teachers. But for the first time in history, the government mandated every child must learn online. Tim, there is no way we're going back. I can't see it.
No, it makes sense.
I just cannot see it. We can't keep them off the screens.
I mean, there is a question here that the importance of kind of face-to-face learning for child development.
Yep.
Do you see yourself kind of developing your learning models around that, as in offering that face-to-face as well?
So I often say to people, we are face-to-face. We're just not in your place. We are face-to-face, live online, fully collaborative tool set. As you work on the whiteboard, it's there. It's shown to everyone. We have group learning with up to 5 students, all working fully live, fully synchronously, fully online. So this boundary between physical face-to-face and virtual face-to-face is being eroded.
Gotcha. And what about the subjects you offer, maths, chemistry? Are you looking to expand those learning subjects moving forward?
So biology and physics will go live now. They go live in January. Chemistry is live. Maths and English are live. The next coding is now live. And remember, coding is mandated in the national curriculum. The problem is most schools don't do it well or at all because teachers can't code and coders don't want to be teachers. So that's why we're teaching it outside of the classroom, because that's the only place we can get access to thousands of computer science students and software engineers who are so keen to teach coding to young kids.
That makes sense. Time for 2 more questions. Who are your major competitors in Australia, and what's your kind of timeline to be cash flow positive?
Major competitors in the learning center space, there are only 2 reasonable sized brands. There's Kumon and Kip McGrath. The challenge with both of those is they are pretty traditional learning centers, a better version of a classroom, and they're a fully franchised network. I think the major competitor to us is the local tutor, the tutor who will come to your home or you'll go to the local tutor. The challenge with that, as parents are discovering more and more, is that is the pay and pray model. They work with your kid, they spend time with your kid, you have no visibility on what they're doing, you pay and you pray till that next report card comes to know if it's working. Whereas with Cluey, it's all about the transparency of the data and the information on exactly how your child is performing every single week. In terms of getting to profitability and break even, we will have our first profitable months in FY23, and we expect FY24 to pretty much be our first full year of break even.
Right, Mark, that's all we have time for. There's 3 more questions there if you don't mind answering those live. That'd be appreciated. Love the passion. Have a nice weekend.
Thank you very much. Take care. Bye.
Next up, we have Elementos. The company is a diversified in production and exploration company with assets in mining-rich jurisdictions, including Spain and Australia. We're talking tin in particular. We have with us Joe David, the CEO. Company has a market cap around 121 million, ASX code ELT, and a 1-year return of 500%. Joe, welcome back. Over to you.
Thank you, Tim. Thanks for having me back. I do have quite a large slide deck, so I'll just jump straight into it. We can tap forward twice, 2 slides. Thanks, guys. Obviously, this is listed. One more slide, please. This is being posted on the ASX under our code ELT. And yeah, please read the cautionary and disclosure statements. Since we were last on Share Cafe and what we announced to the market on Monday this week was our absolute material increase to our resource at our flagship project in Spain, the Oriposa Tin Project. We have a, sorry, could we go back 1 slide, please? We've had a 50% increase to our mineral resource, which is measured, indicated, and inferred. And most importantly to us, seeing we're moving to a definitive feasibility study, is the fact that our measured and indicated categories, which are the key geological categories that feed into a DFS and into an ore reserve statement, is a 78% increase. So absolutely significant change in scale of the minerals that we are estimating in the ground. In addition to that, another major economic factor for us has been the increase in the shallow mineralization that we've defined. Previously about 1.37 million tonnes, we're up now to just under 5 million tonnes, which really should add to the economics when we're able to assess it and announce it to the ASX. So if we just go to the next slide, thanks. So again, there's just a little bit more data there of the 3 categories that make up the measured, indicated, and inferred, but I'm happy to push past this one. Next slide. So, yeah, I've been at a conference all this week, and it's not uncommon for people to come to me and say, well, this looks like a really good story, but I just don't know about tin. And I'm not offended at all. Tin is a small mineral in terms of the size globally, but it's an extremely important one. This slide was put together by Rio Tinto and MIT University a couple of years ago, and they forecast that tin was going to be the most impacted metal by the electrification, move away from the traditional engines and move into smart infrastructure, green infrastructure, etc. The key reason for that is tin is the predominant mineral in solders. Solders are the electrical contacts that connect all the smart items within electrical circuit boards, semiconductors, and the rest of electrical infrastructure. So it is the electronic glue. You can't get away that huge quantities of it are going to be required as we move into electrified tomorrow. Next slide, please. So when Rio Tinto put that slide out a couple of years ago, tin price was down about $12,000 a tonne. People probably thought it was a nice bit of academic work, but really over the last 12 months following COVID, the tin market has boomed, and the pricing's really moved up, where the tin bulls and tin companies like ourselves that saw this demand always thought it probably should be. So right now on this chart, we've got tin price at $38,000 a tonne. So that's a tripling from the lows from a couple of years ago, and we've moved over 100% throughout this year itself. We're trading at 39,000 today, so it's even higher. It's one of the minerals you enjoy waking up to and seeing how it traded on London overnight, because it generally always goes higher. And it's fair to say in the Chinese market, there's a significant premium to the London market, currently trading at $7,000 a tonne, so $45,000 a tonne. So a massive premium right now in China. Next slide, please. The key reason, a couple of key reasons that I'll fly through for this is one, global tonnages have inventories at the major warehouses are down to nothing. Tin's in its fourth year of deficits, and we're down to about less than a day in the London exchange warehouses of global demand, and down to about just over a day in the Shanghai warehouses. So down to about 2 days in total, which is just all-time lows. Next slide, please. So again, another key reason why it looks like there's been a step change and things are here to stay. It's forecast, and this is data from the International Tin Association, is that supply is just not going to be able to keep up with demand in the foreseeable future out to 2030. Up to a couple of months ago, they were predicting the long-term average growth rate of 1.8% on tin demand, and even then the market wasn't going to be able to keep up with it. Recently, based on demand and the electrification and automation infrastructure and this technology super cycle we seem to be moving into, they've increased their estimates 3 to 4%. So forecasting a 50 to 70,000 tonne shortfall of tin metal moving forward. Next slide, please. We'll just skip this one, thank you. Elementos has recently put out its first ESG statement, and we really focused on this, and there'll be a lot more from us on this moving forward as we develop our two projects. Next slide, please. So Oriplace's tin project is our flagship project. It's the project that I just updated you on the resources. It's in the Andalusia region in southern Spain, which is the most mature mining region in Spain. It's had mines operating there for thousands of years, and certainly got some major players operating in the region right now. One of the most significant stories right now is the Sandfire Resources has bought into the Matsa mining complex, a copper mine only 60 kilometres from our project. Certainly great to see another big Australian miner moving into the region, and it gives a lot of support to the environment and the regime that we currently work with in southern Spain, which is relatively supportive compared to other places in Europe. Next slide, please. So just in summary, this is just a visual from the resource that we announced. We've just highlighted the additional mineralisation that's coming in close to surface. Certainly a lot of significant mineralisation close to surface, which means we should be able to get a lot of it out at quite low strip ratios, which is quite material change from the scoping study we put out early last year. Next slide, please. So we'll fly through these ones. Next slide, please. In addition to the resource, we're moving forward a whole bunch of other technical work streams that will feed the feasibility. We've got met test work currently finishing up in Cornwall in the UK. Next slide, please. We've got geotech drill rigs currently working on site. We're about 80% of the way through that drilling program. Next slide, please. We're also doing some groundwater drilling works, hydrogeology works on site. Next slide, please. I'm really flying through these, guys, apologies, but this is available on the ASX if you want to see more detail. So this is the program we're working to get this thing through a feasibility study, and get it financed and into production. So we're planning on getting that feasibility study completed by the end of 2022, moving into finance and construction in 2023. So yeah, we've announced the resource, which is on that line. Our other technical program should be in by Q1. We then move into really detailed mine planning, packaging, get all our CapEx and OpEx estimates ready, and put them together and package that up for the end of the DFS, the end of 22. And in parallel to that, we're submitting our environmental documentation and mining lease application, which should be ready soon after, just into the first stages of 2023. Next slide, please. So we put out an economic study in May last year. As you see, we were getting quite a nice NPV there, 92 million US, 25% IRR. But what I should just highlight is that was done on under a $20,000 tin price, and we had all-in sustaining costs of just under $12,000 a tonne. If you move to the next slide, obviously the tin price has gone significantly up. So not taking into account any other of the project maturation or the increased resource that we've just announced, just running at current spot prices, we're getting roughly a 650 million Australian NPV, currently trading at 100 million NPV on the stock exchange. And this is one of our two major projects that we've got. So definitely some upside there, we believe, for our investors. Next slide, please. So yeah, we believe we sit pretty low on the cash cost curve, and that's obviously very important when you're a miner like ourselves to defend against future price drops. Key reason for that, we are an open pit deposit. Deepest part of our pit's about 200 meters. As I said, a fair bit of mineralization above 100 meters. Our mineralization is cassiterite, which is realistically the only economic tin mineralization you really want to be mining. What is also important is our tin mineralization is hosted in sandstones and conglomerates, not in the granites and the permangatites, which some of the other tin producers are sitting on assets with. Them much more challenging, much more expensive to extract the tin from those ore bodies. Moving along, next slide, please. So our second project is the Cleveland Tin Project. This is located in Tasmania. It was an old operating tin mine, closed in 1986 when the international tin price dropped away. Effectively, this was shut down. Still got a very nice looking JORC resource there from areas that weren't mined. We've got 7.5 million tonnes of ore at about 0.75% grade. It's slightly higher grade than our open pit, which is fine because the cost of mining underground is always slightly higher as well. We've got some pretty nice copper credits, and copper's doing very nicely in the global markets right now. And at the bottom, we've got historically, they just drilled the top of a very nice looking tungsten deposit. Not enough drill holes at that depth to define that any further, but something that excites us for blue sky opportunities in the future. Next slide, please. So pretty much we just got a bit of data on what that historic mine looks like. It's at about 500 meters of working, about 150 meters above the portal entry, about 350 meters below. It's pretty modern mine. Modern equipment can get down it. We've currently done a strategic review on that with the results to be announced to the market soon. And yeah, we've also got a drill program. If you flip to the next slide, new drill program down there, which will be putting 4 to 5 holes into that deposit early next year when drill rigs become available. They're a pretty hard commodity to get hold of at the moment all around Australia. And this is just a few indications of where we'll be drilling. It's 4 holes along strike, which we've got some pretty good data that makes us hopeful we'll hit some more mineralization. Next slide, please. Just as a summary of our market cap, we cleared our debt in the last quarter. Currently got about $5 million worth of cash and a bunch of options to come in next year that has us well funded for all these activities into the next year. Tim, I'm happy to finish that up now. The guys can have a look at the few remaining slides later on.
Thanks, Joe. Appreciate this is your presentation from the Noosa Mining Conference.
It was. You caught me.
There you go. That helps. Now, just back on that Cleveland project, which is obviously based in Australia. Australia's recently announced a $2 billion critical minerals financing facility to support the development of critical minerals. Tin fits in that area. Do you think you could get funding that way?
Yeah, we've spoken to EFIC, who's managing this on behalf of the government already. Unfortunately, right now, tin does not sit on the strategic minerals list or critical minerals list of Australia. It does sit on the list for the US, the UK, the EU, Japan, and most of the Asian countries. So, we've had some conversations recently with Geosciences Australia, and we're pretty hopeful that we might make the revised list moving forward. It is on a sort of a secondary list that sits there, so it's definitely being watched by the government, but unfortunately, we don't quite. At least the tin in our deposit doesn't fit the list, but tungsten does. So, we do have tungsten at the bottom of that Cleveland deposit. So it's something to continue engaging with the government on.
And even though you've just recently had a resource upgrade, is there a chance for any further exploration upside? Have you closed the resource off?
Yeah, no, it's not closed off. There's certainly some additional drilling we can do. We're actually hopeful some of our geotech holes we've drilled in the pit wall might get us a little bit more geotech information on some of those targets. So we're always looking for data. Yeah, no, it's open, and we've got regional prospectivity within the tenement, away from the current drilling. So we're pretty excited that Spanish project will get larger as well.
And I spoke about at the beginning the kind of cost price inflation and pressure that's coming through the supply chain. Do you see that in any of your projects, particularly, you did an economic study back in May 2020. It's got to be updated. Can you balance that off against a surging tin price?
Yeah, absolutely. At the moment, there's so much margin in that tin price. But I think it's fair to say most miners, when you're running you're hoping your revenue is significantly a gap to what your cost base is. So assuming those lines move somewhat, your revenue line's always at a higher base than your cost line. So hopefully inflationary pressures should be a positive for miners. But of course, disproportional escalation in your cost to your revenue would obviously be hurtful.
And just finally, you recently joined the European Raw Materials Alliance. Can you tell us what that is and how does that help you with your Spanish project?
Yeah, hey, I think it's fair to say most people have looked at global mining projects, understand the European Union as a whole is somewhat a quite highly regulated place to do business. Not something that scares us off. It's just they make you tick a lot of boxes. This is effectively European Union's assistance package to that. So they're really helping groups like ourselves, which are on their critical minerals list, including tin, to connect government, industry. They would ideally like a lot of their supply chains to stay within Europe, off-taking, so we'd be selling off-take to European-based smelters, of which there's plenty. And we're happy to work with the government. They do provide a lot of support down into the Spanish government level as well. If you're having any challenges with certain approvals or whatever, they'll support you and I guess remind everyone that getting tin projects up in Spain, in the European Union is very important.
Great, thanks, Joe. I know if you've been on previously, we could have bought your share price around 1.5 cents. So congratulations on the price performance and have a nice weekend. Thank you very much, Tim. You too. Thanks, Joe. Next up, we have Helix Resources, ASX code HLX, market cap around $22 million. Stocks had a 1-year return of up 88%. We have with us Mike Rosenstreich, who's the managing director and geologist. The company is focused on the development of the Colorina copper and Cobar gold projects in central New South Wales. Mike, over to you. Thank you.
Thank you, Tim, and good morning, everybody. Helix Resources is exploring for high-grade copper in the Cobar region. We want to be part of that supply chain that is involved in the energy transition and mobile electric vehicles. Next slide, please. Next slide. That picture on the right, that's what high-grade, massive copper sulfide mineralization looks like. That's what we've been drilling for the last 5 months on our projects at Campaligo and CZ. We've been consistently reporting strong copper intercepts from this ongoing drilling program. Those 2 key resources are located within a very large strategic land holding in the Cobar region, and that gives us the opportunity to generate new prospects that we bring through and hopefully advance to a resource level. We're in Cobar. It's a prodigiously mineralized terrain. It's got significant processing and mining related infrastructure. So there's opportunities to commercialize all scales of discoveries. And then we're sitting in this very positive copper price environment. That kind of sets the scene for the rest of the discussion. Next slide, please. When I joined Helix in January of this year, I articulated a very clear strategy: Cobar, copper, gold, and for the company to be well funded, to be able to gain a momentum in its exploration activities and then maintain it. And that's, I think, what investors are looking for. So how have we gone so far? Well, since that time, we've drilled about 3,500 meters in a variety of diamond and reverse circulation drilling, a couple of dozen holes across those 2 advanced prospects. We've also generated a range of new regional targets and reinforced existing regional targets by completing electromagnetic coverage on the entire prospective strike extent. Electromagnetics, that is the key discovery tool for finding copper deposits in the Cobar region. Critically, we've also installed a completely new management team, especially on the exploration side. So no more fly in, fly out from Western Australia. Our exploration team is based in Orange, close to the projects. Next slide, please. So I was boasting about the neighborhood that we operate in, and you can see from the map the basis of my boasts. You can see our Western and Eastern group tenements shown there, and around us, high quality neighbours. Glencore producing around 50,000 tonnes of copper a year from their CSA mine. And notably, to the north of our tenements in the east is Helix Resources with their long-lived Triton operations, which are occurring to the north on the same prospective trends that we're exploring for there. So a terrific neighbourhood, highly mineralised terrain. Next slide, please. Zooming in a little bit now on our particular tenement position, around 1,500 square kilometres that we have here between this eastern and western group. And what we've done here is we've identified three main mineralised trends. We've got the Rochford Trend on the western block there. That hosts our Campaligo resource. It's an inferred resource of 1.5 million tonnes at 1.2% copper. And then on the eastern side, we have the Colorina Trend, which hosts our CZ deposit. That's an inferred and indicated resource of 2 million tonnes at 2% copper and a little bit of gold. And then on the western margin, we have a much earlier stage trend, which we call the Miriola Trend. Now, I said that EM finds copper in Cobar, and one of the major advances that we've made is that the original EM coverage was only about 20% of the tenure in the area outlined in white on the right-hand, on the Colorina Trend there around CZ. So in March, we flew all of the rest of the prospective trends, and that creates a tremendous regional data set on which to base all of the ongoing exploration. Indeed, we like that regional data set so much, it prompted us to apply for more ground, as shown on the blue shading on the right-hand tenement block. And also we've done a deal with Alpha HPA to acquire more prospective copper ground to the northeast of CZ. Next slide, please. So coming in on the Campaligo or the Rochford Trend area, as I said, Campaligo is one of our two advanced resource projects. It's a joint venture with Helix Resources. We have 70%. The two companies are co-funding. We manage it, but there's tremendous collaboration between the two groups in terms of formulating and executing our plans. Now, along the Rochford Trend to the north and south of Campaligo, we've generated a number of regional targets which have been reinforced with that regional VTEM. I'll talk shortly about the enhanced prospectivity around Campaligo, but there's also some very significantly anomalous copper intercepts at a prospect we call Bijou to the south. And we also are pretty excited about the VTEM anomalism around a little prospect called Little Boppy to the north, as well as a range of other opportunities. But those are the priority areas we'll be working on over the next few months. Next slide, please. So this is a long section view of the Campaligo deposit. It's about 400 meters north-south and up until recently extended vertically for about 200 meters. You can see the blue dots there beneath the orange shading. Those are the drill holes that we've put in to the property. And clearly they have pushed the mineralization down at least another 100 meters or so vertically. Now, very early in the program, hole 2, we had a spectacular intercept, that massive cold sulfide core that I showed at the start of the presentation, 18 meters at 3.4% copper. That is a massive to semi-massive copper shoot in the middle of the Campaligo zone there. And I think that kind of set expectations with investors, thinking that we were going to get a lot more of that. And frankly, interest waned subsequent to that. That intercept put our price up to something like 5 cents. But I think what people aren't realizing is that the rest of the holes, they all hit strong, potentially economic copper mineralization, 6 meters at 1.6, 10 meters at 1.6. These are all grades consistent with Campaligo. And indeed, if you look at the reserve grade of Helix's underground, very deep underground Triton mine, their reserve grade is 1.4% copper. And if you look at the reserve grade of their open pit operation, 0.9%. So our intercepts here are clearly in the zone, and we are going to continue to drill here. Next one. I'm particularly interested in those that high-grade shoot. Next slide, please. I talked about the VTEM highlighting regional potential, and on this color image, you can see those hotspots. Those are the more conductive areas highlighted by the VTEM. The lime green is the Campaligo resource, and you can see that we've identified EM anomalism to the south, to the north, and to the northeast. So we are planning to come back into this area with a drill rig, hopefully before Christmas, after we've done some surface EM work to better define those broader anomalies to target for drilling. Next slide, please. So now we're moving to the eastern block of tenements, the Colorina trend, the trend that sits south of Eris's operations. We have our CZ copper deposit in the lower third of the tenement area there, and we have a range of regional targets over that 65-kilometre extent. We've identified several that we want to get working on sooner, such as the Quanda area to the north and the Five Ways to the south. Next slide, please. This is a plan view of the CZ deposit, highlighting some of the historic drill intercepts. And you can see it's a genuine high-grade copper sulfide resource. We've got 14 meters at 4% copper, 12 meters at 5% copper, 10 at 3.7, trending to the southeast over around about 800 meter strike extent. You can also see some of the recent holes that we've drilled and announced, shallow RC holes, where we've got good results, such as 7 meters at 2.6, within a broad, lower grade 0.9% envelope. And we've done that and over 100 meters, and it's still open to the east, and it's a new zone. So we're very excited about being able to follow up that zone. Now, if you go to the next slide, please. One of the challenges that we've had here is that we're not being constrained by previous geological models. We've actually found that there's a large proportion of drill holes that have never been geologically logged and probably undersampled. So there's a huge gap in the data that we're dealing with. But that also creates a really exciting opportunity. And so we're aiming the rig at what we can see in terms of geophysical data and geological data, and we are successfully hitting massive sulfides and the new oxide zones. Next slide, please. In terms of regional work at Colorina, the pink area shows areas that we have approval to drill auger soil holes to really define new prospects and reinforce targets. And as I said earlier, we've made new tenement acquisitions to the southeast to capture all the potential around that Five Ways target. And we've also tidied up an existing joint venture relationship with Alpha HPA in the northeast. Next slide, please. So timeline in terms of our activities over the next 6 months. We run our activities in 2 streams. We focus on our advanced targets and defining new targets around the resources, but also very importantly, a very active regional program to generate new targets to advance to resource work. Next slide. Quick corporate snapshot. Our share price has been around about 1.6 to 1.8 cents, gives us a market cap of $20 to $22 million. Our share register, major shareholder is Yandal Investments at around 4%, but notice the open nature of the register, top 20 hold less than 30. Now, our share price graph, I think, is interesting. I think from the start of the year, it shows support and interest in the new exploration strategy that we're executing. And then you see the share price explode on the back of that massive copper sulfide intercept. And then even though we were still banging out very good copper results at both Campaligo and CZ, obviously investor interest is waning. I've got to fix that. It's my job. Next slide. Just to wrap it all up, what I'd like you to take away from this presentation is that this is a really interesting Australian copper exploration story with a company that is well funded. We have got existing copper resources and we're working to grow those resources, and we have delivered consistent high-grade intercepts from our work already. We're working regionally to bring up new prospects. We've got a new team. We're absolutely focused on that Cobar, looking for copper gold area. And this is all in this wonderful, strong copper price environment. Thanks very much.
Thanks, Mike. I know there's an analyst online here who knows this space. He's got a question. Are you most likely to end up with multiple small mine pods or a much bigger single site copper discovery to get a viable copper project?
Interesting question. Thank you. I think we're open to both. And the reason that I say that is if you look at the evolution of the deposits that are being mined to the north of us, they started as quite modest resources and reserves, and they've grown through ongoing drilling, understanding the geology, in the case of Tritton, for example, to become very significant copper deposits in their own right. So the idea is to always be advancing prospects and a range of resources to build up the overall copper inventory, but with good geology and downhole geophysics to keep on going down. If you look at the evolution, for example, of Tritton, you can see that there were lots of changes, and then suddenly a new zone was discovered. So there is potential for large deposits, but also we're alive and well positioned to more modest sized deposits as well.
And there's another question here. New shallow high-grade oxide copper zone has recently been intersected at CZ. What have the results told you about the geology around CZ, and how optimistic are you about extending this zone?
Look, I think we've got a great chance of extending that zone. As I said, there's been for some reason, there's been a lot of drill holes that were not logged and were undersampled. And so some of the mineralization styles were not recognized in those historic holes. So there's a big job for us to do, which does open up the potential to be able to reconfigure the geology. I'm not quite answering the question, but we need to do that geological work to really get a solid geological model. There's clearly a lot of high-grade copper there, and we need to understand it. And that new oxide zone does open up new opportunities for us, and we are following them up.
And your shareholders will soon be voting on the Alpha deal. How does the Homeville nickel, is it copper? What's that resource you're talking about there with Homeville, and how does that fit into your copper strategy?
Look, I've had a lot of questions on this. The Homeville resource is a nickel cobalt laterite resource. It's associated with what are called ultramafic rocks around that side. We had a joint, and I've had questions and concern from shareholders saying you're losing focus, you're being distracted. I can assure you we're not. We had a joint venture with Alpha. There was a lot of complicated overriding and conflicting rights. We've cleaned all of that up. We like their ground for the copper opportunities. And at the same time, we're now custodians. We will own that resource, 17 million tonnes at 0.9 nickel and 0.06 cobalt. And what's interesting about it is we're looking to attract independent funding to it. And let's see what sort of an opportunity it creates for our shareholders. We have high-grade cobalt and nickel intercepts to the north along strike from that resource. The resource has very benign metallurgy. We're not talking necessarily about big capex numbers with that kind of metallurgy. And I think it presents a really interesting opportunity. And I'll just make one more comment on that, is that there was not even a resource, there was a prospect 40 kilometers away that was purchased for $2.4 million cash and scrip. And that was a nickel cobalt prospect. And here we have a resource with good upside. So I think there's value there, but as a side project to draw that value out.
Great, Mike. That's all we have time for. Thanks for your presentation. Have a nice weekend.
Thank you very much.
Next up, we welcome back Antisense Therapeutics, ASX code AMP, market cap around 138 million. The company's had a one-year return of up 110%. The company is a biotechnology company developing and commercializing antisense pharmaceuticals for large unmet needs and rare diseases, such as Duchenne muscular dystrophy. We have with us, and welcome back, Mark Diamond, who is the Managing Director and CEO. Mark, over to you. Thank you.
Oh, thanks, Tim. And it's a pleasure to be presenting again today on Antisense Therapeutics. I am, though, particularly excited to be presenting today, as just last week we announced a major advancement in our development program for Duchenne muscular dystrophy with the Paediatric Development Committee of the European Medicines Agency agreeing to the design of our proposed phase 2b/3 pivotal trial in Europe. So this outcome essentially positions us as potentially one study only away from being able to access the second biggest pharmaceutical market in the world. It also puts us in elite company within the local biotechnology space, listed space, with only a handful of companies at the same advanced stage of clinical development. So the majority of whom have market caps that are many multiples of the current market valuation of Antisense Therapeutics, and topping out at $2 billion. It was also very encouraging, Tim, to report in concert with this achievement of the major development milestone that we completed an oversubscribed placement to institutional and sophisticated investors to raise $20 million to fund the advancement of this pivotal program. So this funding significantly strengthened the company's balance sheet. In fact, it's the most capital raised by the company in its history. The announcement also outlined a pathway to funding the program all the way through to trial results, and a funding pathway that allows us to match the funding to our near-term development requirements, while also avoiding unnecessary dilution. So I guess, simply put, we're at the doorstep of something rare and exceptional in the biotech space. And so I'd like to think our shareholders should be very excited about the journey we're about to embark on. So next slide, thank you. So this, I guess, overviews the perspective I've just provided here. The lead program being in Duchenne muscular dystrophy. And so my presentation today will focus on Duchenne's. And as I said, this very exciting next step in the final approach towards getting an approval for the product in Europe. Next slide, thank you. The price chart here tracks the share price performance of the company since we initiated the program in Duchenne muscular dystrophy, and when we raised capital, when the company was capped at 5 million, we did that at 2.4 cents, up to tracking the share price up into our most recent financing, which we did at 24 cents, with a market cap now just under 140 million. You'll notice that the major shareholder is Platinum Asset Management. For those unfamiliar with Platinum, they are an Australian-based investment manager with over $22 billion under management, highly regarded, with a special focus in healthcare, investing internationally. So we're delighted to have them on the register. They've participated in every financing that we've undertaken to date, on the program, including the most recent financing at 24 cents. So again, we're really pleased to have them there as a supportive shareholder. Just point out the analyst coverage that we have on the company available on our website. 5 local analysts that have positive recommendations on the company. Next slide, thanks. The company has a very experienced and internationally recognised board, but I'd like to specifically point out the appointment of Dr. Charmaine Gittleson as chair of the company. That's a recent appointment. Dr. Gittleson was CMO, Chief Medical Officer at CSL until she recently retired from executive duties. And so, with Charmaine's appointment, along with Dr. Gil Price, we've significantly strengthened the international clinical development of experience of our board, timed with us moving into this critical last phase of development. So, not only do we think this, reflects the bolstering of the experience of the board in anticipation of this next major phase of development for the company, but we also think being able to attract people of the caliber of Charmaine and Gil onto our board, does suggest the potential that sits here with Antisense Therapeutics. Next slide, thank you. So Duchenne's is a progressive muscle wasting disease of boys. It's caused by a genetic mutation that prevents these boys from making a protein that's important for normal muscle function. While it's a rare disease, it actually affects a large percentage of boys. And so, in fact, there's about 45,000 boys in the Northern Hemisphere that have Duchenne's. A key challenge when treating Duchenne's is to look to address the inflammation in the muscles that drives this steady, progressive, insidious loss of muscle. And today, there's only one way of going about addressing that inflammation in these boys, and it's through the use of a drug class called corticosteroids. These corticosteroids, they are modest in their activity or effectiveness, but they come with some very substantial side effects. And the drugs were first approved 60 years ago. So we haven't seen us, well, at least in the Duchenne community, hasn't seen a significant innovation in the treatment of inflammation for all that time. So we're focused on in developing a drug to better address this inflammation than the corticosteroids, and we're really excited about the prospect we have with our drug H1102. Next slide. So because this is an indication where there's a substantial unmet medical need, where the market is paying a premium for access to therapies, and where there's very little competition, we see this as being a multi-billion-dollar product opportunity. And the reasons for that are highlighted here. We've got a novel mechanism. No other drug that's been developed for Duchenne's works in the same way as our drug. We're the only company in the world that has a drug working in the manner that it does in these Duchenne's boys. We've got great phase 2 clinical trial data, which is underpinning us moving into this last lot of clinical development. Because of the novel mechanism of action of the drug, we expect the drug to be able to be used in combination with existing therapies. The benefit of that is that you're avoiding head-to-head competition, and so that is a really exciting aspect to the program. We've got a tremendous IP position that we've established to support the commercialisation of the drug. That's been strengthened as well too through the orphan drug designations that we've achieved in both the US and Europe. That adds additional market protection beyond our patents. Next slide. So the study that we've raised the capital for to advance towards an approvable outcome in Europe is highlighted here. It is what's known as a multi-centre randomised double-blind placebo-controlled study. So it's sort of gold standard for looking at getting a program like this through the regulatory authorities. You'll see we're planning to run 108 patients in the study, dosing for 12 months. And we'll be also following these patients up in what's known as an open label phase 2, add more safety data and experience to the program, but ultimately looking to generate data in these boys at 12 months that if it shows significant improvement over placebo, allow us to move forward with seeking approval in Europe. Next slide, thank you. So this outlines the timeline for the development of the drug. It is an accelerated program if you were to compare it with other programs that are looking to take a drug through to approval. Those for, say, chronic diseases. This is a truncated program because we are focused on a rare disease indication. Next step for us, now that we've got the financing in place, is to complete an evaluation feasibility of the trial sites that we're going to be running this program at in Europe. Previous slide mentioned there's going to be in 9 countries where we're looking to enroll in over 30 trial sites. So big program that we're moving forward on, and we're all going well, which it is at the moment. We're looking to be able to initiate the study first half of next year. Next slide, thank you. So the market for this drug is very substantial, and when we think about the market potential, we need to break it out in sort of two levels. Firstly, there's the opportunity, near-term opportunity in Duchenne muscular dystrophy. And as I mentioned earlier, because this is a marketplace where there's a desperate need for better therapies, but there's actually quite a large patient population, and where the market will pay a premium for therapy, this market is expected to grow as big as 10 billion by 2030, and again, with very little competition. We're initially focusing on the boys that are more advanced with the disease. These are boys that become non-ambulant, so require wheelchairs for mobility. For those boys, they have nothing beyond the corticosteroids. And so we think that as they represent over half of the boys with Duchenne's, this presents as a multi-billion-dollar opportunity in the non-ambulant space for our drug. But beyond that, the second aspect to the market potential of the drug, we see H1102 having a broader application in inflammatory disease beyond Duchenne's muscular dystrophy. And the market for anti-inflammatory drugs is enormous. It's forecast to grow to nearly $200 billion marketplace by 2027, you see in the slide there. And we think that this drug can be a major participant player in that marketplace, where we are working on programs to shore up the drug's activity in broader disease setting. And so we're looking forward to reporting our progress in these other diseases. So next slide, thank you. Last and final slide in the presentation today. Just wanted to, again, reinforce that the $20 million that we've just raised today allows us to advance into this pivotal trial in Europe, which we expect will generate a substantial news flow and near-term value creation catalyst, with obviously the rich news flow that will come from that. What we'd like to also suggest to our shareholders is that, just given the company's track record in hitting milestones and seeing that reflected in the ever-increasing valuation of the company, that the company will look to deliver on that again in the advancement of the program into this pivotal program. But what's really exciting, and I think would really capture the enthusiasm of all our shareholders, is that we're heading into the last and final stage, the greatest value creation point for a company in drug development, and that is as we head towards a potential approval of the drug, as I said, in the second biggest pharmaceutical market in the world. So thanks, Tim. Happy to take any questions.
Thanks, Mark. A couple of questions, quite a few actually. There's always a lot of debate amongst investors in the biotech space around partnerships and the timing of bringing on a partner. What are your views on this topic in regards to Antisense?
Sure. So we're presently focused on advancing into this phase 2b/3 clinical trial in Europe. So we've raised capital, moved the program forward. We think that is a exciting opportunity to create substantial value for the company. But we expect, Tim, that as we advance the program, we'll generate interest from pharmaceutical companies. And so what we've said to the market, Tim, is that, as that interest comes through, we'll obviously entertain it, and, we'll contemplate, any overtures, around the program, in the context of that. So, we will, of course, if, something presents that we think's in the, interest of shareholders, if anything rises to the level of materiality, we'll report on it. I just make the point, I mentioned earlier that we're within, there's only a handful of companies, in the local biotech space that are in advanced clinical trials. The ones that have the biggest market caps are the ones who have a partner of the program. So, what you're doing there, you're trading off, obviously risk, versus, the value creation potential. So our view is, we've got, great opportunity here to really, drive, extraordinary value on the company if we continue to hold the asset, retain the value, and march it forward towards this approvable outcome.
And there's a question in terms of the kind of big pharma, Sarepta and rival Pfizer are kind of neck to neck in a race, and they're looking at bringing gene therapy to DMD. Both have had issues recently, big issues. How does this kind of impact Antisense?
Sure. So I guess, at an obvious level, while it's unfortunate for the Duchenne's community, it does reflect as good news for Antisense Therapeutics, because, it has people sort of focusing away from a gene therapy approach to other ways of, looking to address Duchenne's, like, the treatment of the inflammatory aspect of it. So, we think that it does shine a spotlight on our drug, these major players having these setbacks, We also believe that, Tim, is that, you know, these gene therapies, they continue to be used in combination with anti-inflammatory therapies, the corticosteroids. So even, you know, with these programs with the purported promise that was being suggested by those major pharma companies, which now has been blunted a bit with the setbacks, you know, they're also having to acknowledge that they were going to have to use, you know, an anti-inflammatory therapy. So we think, you know, that even if these programs should move forward, they're probably going to be focused on the ambulant boys only, not the non-ambulant boys that we're in, and likely present as an opportunity for a combination therapy with our own drug.
And Mark, you just recently did a $20 million placement to institutions. You spoke about Platinum International. They run a healthcare fund with Bianca Ogden there. Can you give us a little bit more colour on the type of institutions that come in to that raise? I know you probably can't name them, and where they see the potential upside in regards to owning shares at 24 cents.
Sure. So you're right, Tim. You know, Platinum participated in this raising. They become a substantial shareholder in the process. So, you know, that news is in the market. You know, correctly, you know, stated that I can't speak specifically to, you know, the other investors that have come into the stock, but it was a specific placement, an oversubscribed one to institutional and sophisticated investors. You know, why they participated, I think, is the same story that I'm talking to here today, Tim. You know, that you know, they've seen the de-risking around the news from PEDCO. The European regulatory authorities given us the green light to move into this next phase of development. They're mindful of the market capitalizations of our peers locally. They know that some of these companies have got market caps topping out to 2 billion, where we're sitting well below that at the moment. And so, you know, I think they're major influences on the decision. I'd like to think as well too, Tim, that we were convincing, you know, in our the story that we put about our ability to, you know, to hit milestones, to be able to, you know, deliver on this, you know, future value creation. We said, you know, through the development of this drug, you know, I think we hit on 19, you know, key value inflection points. And so, you know, with the view that, you know, that puts us in great stead. I think, again, you know, having Charmaine and Gil come onto the board, we announced that before we went out to the financing. I'm sure that's, you know, also helped in the process. So I think it's the same story, Tim, that I'm talking to here today, you know, that you know, has encouraged these investors to come on.
Great, Mark. That's all we have time for. There's quite a few more questions. I'll shoot those through to you on Monday.
Terrific. Thanks a lot, Tim.
Thanks for your time. See you later.
Bye.
That's all we have time for this week. We'll be back next week. Enjoy your weekend. See you next week.